Correct. You think you pay for insurance in order to protect you when an event happens. The problem is policies have become more and more difficult to understand what you have coverage for. I mean, during the last couple of hurricanes here in Texas and in Florida, I had clients who thought they had a $250,000 deductible. They had a 5% deductible, which was $3 million.
Welcome to the Texas Real Estate Pros Show, where we interview Texas real estate professionals from active real estate investors, lenders, property managers, and many others that provide goods and services into the real estate investing industry in the great state of Texas. Our goal is simple: to share what's working now to help you improve and scale your business to the next level, and to meet the pros that can help you get there. Texas Real Estate Pros is powered by Investor Fuel, America's leader in helping real estate investors and entrepreneurs build the business they need to live the life that they've always dreamed of. Let's start today's show. Property insurance for real estate investors doesn't have to be difficult, but it does need to be there to protect you when you need it. MyInvestorInsurance.com not only provides insurance at 15 to 30% cheaper than traditional agencies, it's built specifically for real estate investors like you. You can set up an account in about 2 minutes, get quotes on properties, turn on and turn off insurance for your fix and flip or rental properties in around 2 minutes without having to talk to anyone directly, all through our portal. There's no better way or faster way to make sure you've got the coverage you need to protect you, and no more lengthy policies either. Once you're set up, you're billed monthly and prorated by the day for however long your policy is active. It's powered by MSI, the third largest independent MGA, with 1.5 million customers and more than $1 billion in cumulative premiums written. Get set up today in about 2 minutes at myinvestorinsurance.com/fuel.
Hey folks, welcome back to the show. Today's guest, Ron Snouffer, is an investor for 20 plus years, and he's also a public adjuster. He also has a background as a general contractor. I'm excited to have a conversation with him today. Ron, welcome to the show.
Thanks for having me on, Dylan.
It's great to meet you. And I always like to start off at the top of this show by asking guests how they got started in real estate.
So I originally got started as a RE/MAX agent, selling houses to single families, starter homes, so on and so forth, and quickly realized that I did not enjoy that aspect of real estate.
You said the retail's not for me.
Retail was not for me. You're basically on call 7 days a week, 24 hours a day. People don't respect your time whatsoever, as I recall. It was crazy being in that business. I did it for 2 years. And then what ended up happening was one of my buddies was flipping houses, not a ton of houses, but he was flipping a couple of houses a year. And he wanted me to help him sell one of his flips. And I was like, man, this is just too easy, because an investor doesn't care if the paint colors don't match or what the deal is. All they care about is, will the numbers work? And so I saw immediately a niche there, and I switched from being a retail, residential real estate agent, and I started selling investor properties exclusively.
I am involved in both of these worlds. I'm a realtor in Texas as well. And what this taught me from both working with investors and working with retail buyers is, like you mentioned, it's two totally different arenas. Like, they could basically be two totally separate careers as far as I'm concerned, because you'll talk with some agents, and I don't think this is true for all agents, but you'll definitely talk with some who almost have a negative perspective of working with investors. Like, they're going to be, big ego. They're going to have their own vernacular. They're not really buying, and so on and so forth. And I come from the perspective of working first with investors as a wholesaler, and then now working with retail buyers. So I see all sides of it. When you were making that transition to working exclusively with investors, were you thinking, hey, this is going to be, the niche that I stay in? Or were you also looking at that same point in time and looking for properties for yourself?
Combination of both, but initially I was only looking for investors, right? I didn't have the capital. I was still pretty young. Just barely got married, and I was looking for just that paycheck at the time. And I was kind of forced into it because one of my investors, we were partnering in on a job together, 50-50 split. He ended up not showing up for the closing. And so I already deposited my money into escrow. I already signed all the documents. He never showed up for closing. He flaked out on me. And so I ended up having to buy the property myself, and it forced me to become an investor overnight. And after that, then I did a combination of investing and still selling stuff to wholesalers on properties that I didn't want.
Stop living on an island and join the #1 mastermind in America for professional real estate investors. Investor Fuel is a community of hundreds of the nation's top investors working together to build stronger businesses and better lives. In addition to the amazing community of real estate investors acting as a board of advisors for one another, Investor Fuel members have access to 100% funding on purchase and repairs for our members only, a health insurance program, and benefits and discounts that more than pays for the membership of most of our members, meaning it's actually costing you money to not be a member of Investor Fuel. If you're looking to scale your business and build a business that allows you to live the life of your dreams, please visit investorfuel.com today and book a call with our team.
How was that for a first deal? You found out at closing you're the buyer.
Well, yeah, I was expecting I would get some tutelage. Somebody would show me how to go out and find the subcontractors and so on and so forth to do the work that needed to be done. And nope, I got thrown in the deep end of the pool and did it all. And lucky for me, I had a pretty successful outcome and pretty happy with it all.
What time period was that first deal?
As far as how long did it take me?
No. What years we talking about?
That would have been around 2004, 2005.
So pre-housing crisis. At that point in time, was this DFW area?
It was DeSoto, Texas, if you know where that is.
Were there lots of folks who are looking at flips? I'm imagining, this was maybe less common than it is today, but I don't know. I wasn't around at that period investing. Were there lots of competition and folks looking at flips, or was it a niche market at that point?
Now there's still pretty active buyers out there. There's multiple real estate investment clubs that were teaching people how to buy properties and go out and find stuff. I'm not familiar with how difficult it is today with that because I do my own thing.
Yeah.
But back then we had competition, but I rarely ran into somebody else that was buying or after the same property that I was after.
And then, housing crisis hits. So now we're in a totally different area. Things change drastically. You've got Dodd-Frank. It's now harder to qualify for loans for everybody. And the whole real estate industry changes. But I also understand that I believe it was after that time period that you ended up getting into public adjusting from a tornado, if I'm not mistaken.
And so what happened in 2008, you couldn't get retail loans for your investors anymore. It didn't matter what the numbers said or what the property qualified for, unless they had a 50% down, they weren't getting bought for anything. So I had to make a drastic shift. Somebody told me I should get into adjusting. And so I started as an IA for the insurance company in 2008 during Hurricane Ike. And quickly realized, well, I know enough about construction. I should be on the other side and helping property owners get their properties built back. And then in 2011, one of my clients who was a professor at TCU, they got hit by a tornado. And the insurance company was paying them about 20 cents on the dollar for their damage to their property. And I had so much business, I didn't have time to help them negotiate with the insurance company, so on and so forth. She went out and found a public adjuster that helped her through the process of getting her property back paid for correctly. And then I was able to rebuild it. But during that process, I learned what a public adjuster was, and I really fell in love with that aspect of being the advocate and helping property owners get back to where they were before an event happens.
Yeah, a tornado will do it. I experienced one living in Denton myself earlier this year. And when we talk about worst case scenario, homes being destroyed, all different types of damage. People typically think, and of course, as a public adjuster, I'm sure you have tons of experience with this. Oh, I'm going to go call my insurance company first. And it's not until their back is up against the wall that they start looking at other options.
If you're looking for consistent, high-quality leads, look no further than Investor Machine. Investor Machine isn't just another agency, it's the most sophisticated, data-driven lead generation company on the planet for real estate investors, and serves the role of being not just a lead generator for your business, but a marketing partner that is helping you achieve your goals along the way. Go to investormachine.com to learn more and schedule a call with our team today.
Correct. You think you pay for insurance in order to protect you when an event happens. The problem is policies have become more and more difficult to understand and understand what you have coverage for. I mean, during the last couple of hurricanes here in Texas and in Florida, I had clients who thought they had a $250,000 deductible. They had a 5% deductible, which was $3 million. In Florida, because of a named storm, they had a 10% deductible on their umbrella policy, which meant they had a $50 million deductible.
My God.
And so imagine you have one property that gets damaged from a hurricane, but yet you have an umbrella policy across the entire state of all your properties at $500 million. And if a storm event happens, that umbrella policy kicks in and the deductible for all the properties happens. So now you have a $50 million deductible versus that single site deductible. You don't have coverage.
You don't.
If you remember during 2021, we had all the floods here in Texas. After those flooding, a lot of insurance carriers went to a minimum coverage on water damage, which means you may not have the coverage you think you have for your apartment or your single family that you had before. You could have $10,000 in coverage and have $100,000 in damage. That'll bankrupt a lot of investors.
Now, I've spoken with some other public adjusters on this show, but none who have the scope of work that you've done, from being a realtor to a contractor, investor. Should investors be looking at talking with maybe a public adjuster before they buy their policy so that they could have someone review it in the case that something goes wrong?
Yes, depending on what state you're in, you really need to have somebody other than the agent advising you on what coverages you do have. You know, there's a lot of good agents out there, but unfortunately, a lot of agents are also just marketing and sales reps, which means all they're doing is selling you a policy that they think you need, not knowing what coverages you're going to be missing out on as an investor. It is about cash flow, but it's also about the ability to retain that asset if something devastating were to happen. I had another client who didn't realize they didn't have coverage if the tenant caused the fire. $1 million fire. Lady decides she's going to commit suicide by fire in her apartment complex. She sets her curtains on fire, goes to the bedroom, takes sleeping pills, burns down the complex. They had no coverage because in the policy there was an exclusion for arson by the tenant.
That'll devastate any investor. Do you, in your experience, when folks are taking out these policies, are they looking at all into this deep into it, or are they really looking at it like, well, I need to have this because I own the property, and it's like a limited thought in their mind? They're not thinking about the worst case scenario.
So I'm gonna share two aspects. One of my clients has close to 1,000 residential properties and then a few hundred multifamily. And out of those 1,000, he has about 300 that has no insurance on it whatsoever, because it's cheaper for him not to have insurance and self-insure those 300 properties, because the likelihood of them catching fire is very nominal. And so he doesn't have to worry about it. He's also an attorney. He's not just a real estate investor. But the reason why I bring him up is he understands policies. He's an attorney. He can read them and goes through the entire process of it. But he still has me review the policies that he has, because of the fact that as an attorney, he specializes in real estate law. He doesn't specialize in insurance law.
Yeah.
As a mortgage adjuster, we're familiar with what's going on with these policies. We understand what the exclusions, the addendums, what the endorsements say, and each threshold on what changes. And you have to understand that insurance, what used to be easy to read and understand, now is very complex. Um, an attorney out of Tampa, Chip Merlin, just did an article about you need a law degree to read your insurance policy.
Yeah.
It's very enlightening.
If you're a new or newer real estate investor looking to launch or grow your real estate investing business, please check out Investor Fuel Club. It's a coaching community, but unlike anything you've ever seen before. And you can actually partner with members of our mastermind from coast to coast on deals right in your market. There's no better opportunity to build a consistent business than to literally partner with pros to help you avoid costly mistakes, avoid the need for capital to do deals, and help you eliminate your fears as you're starting your business. Learn more about Investor Fuel Club at investorfuel.com/club.
You know, when we talk about when these situations happen too, and I hate to say this, but in many cases, it's going to be the first time that someone's really taken a look at their policy. So, hey, what's my deductible? What's the coverage? And you don't want that. I do want to pivot here, though, Ron, and ask you about what the situation looks like after something drastic happens. In the case of a single family home, right? Home burns down, right? In some other states, I've heard this idea of there'll be a bunch of people kind of showing up to your door and many will be public adjusters. Does that happen in Texas as well? What's the typical scene like? What's the process like?
There's not that many public adjusters in the state of Texas. I hear that happening a lot in Florida as far as public adjusters showing up right after a storm event, because there's almost 10 times as many public adjusters there as there are in Texas. And then other states, I mean, I'm licensed in several states where there's less than 50 of us in the entire state. So that should tell you a little bit about how few and far between public adjusters are. A lot of times people don't know what we are. But with that being said, the duties after a loss now all fall on a property owner. You used to think that you call your insurance company, they're going to come out and take care of everything. No, it actually changed about 10 years ago so that you're responsible for everything, proving your claim to the insurance company before they owe you anything. That wasn't a fact 5 to 10 years ago.
So the burden of proof is on the homeowner before it is on like any type of fiduciary responsibility by the insurance company.
Yeah, if you look at a policy that was written 10 years ago, the duties after a loss on the on the carrier were about 2 pages. Now it's flipped, and those 2 pages are all on the property owner, and the duties after a loss are about a paragraph for the insurance company.
Wow. I guess, of course, you want to make sure that you've reviewed your policy before anything like this does happen. But in the case that something drastic does happen, is there anything that people can do if they don't have the coverage that they thought they did? Like I've heard this happening, and to use a famous example, in like the LA fires, right, where a bunch of people didn't have certain types of coverage. Are these people just at a loss? Is there anything that can be done?
SOL, they're out of luck in a lot of cases. Some of the fire guys in California are getting low interest or no interest loans to rebuild from the federal government and or the state. But in most cases, they're not getting anything. And I mean, FEMA will only pay a certain amount. You may have a $3-4 million fire loss, and FEMA's going to pay you $250,000 max.
Yeah, that's devastating. When I think about one of the things that goes understated, it is this area of insurance. Because like I said, it's something that sometimes you might think of as I'm not going to put too much effort into this. I just kind of need it. But then when you need to actually take a look at your insurance when something drastic happens, you're probably going to wish that you had put some more effort into it up front. We are coming up on time here, though, Ron. Where can folks go? Where can our audience go if they're interested in reaching out to you? Maybe they're an investor themselves and would like a second opinion on how their policy looks, or maybe they have some concerns about what their policy is looking like right now.
So we do free policy review. We'll advise anybody on what their policy states. You can go to www.nationalclaimsnegotiators.com and plug in there for us to do a policy review on whatever policy you have. We work with single family homeowners. We work with large asset managers and everybody in between. Currently have 18 active claims across the country in different states. So we are pretty mobile. And then you can always find me on Facebook or LinkedIn under Ron Snouffer. So I'm pretty active on both of those.
Ron, thank you so much for coming on the show today.
Appreciate it. It was fun.
Thanks for joining us for today's show. If you're looking to take your business and your life to the next level, you really need to learn more about the Investor Fuel Mastermind. It's your shortcut to success. To learn more about the amazing benefits of the Investor Fuel Mastermind community, including surrounding yourself with hundreds of other amazing entrepreneurs, 100% financing on your deals, member-only discounts, and so much more, please visit investorfuel.com/Texas. By the way, Investor Fuel is even Texas-based. Also, if you're interested in applying to be a guest on this very show, the Texas Real Estate Pro Show, please visit investorfuel.com/Texas. You can also check the show notes for access to free resources, how to get access to world-class lead generation, and much more. Don't forget to subscribe on YouTube or your favorite podcast app so you never miss another episode. We'll see you on the next show.